Morning all, how are we all doing? Morning, Danny, JC, FTNet, Evil, Senji, Paul, Themba, Virginia, how are we doing? Everybody have good weekends. I got my hot dog. For anybody that was in here on Friday, I got a tip, so I bought a hot dog with it. Morning, Edward, Sarah, how are we doing? Right, so I've just posted the week's live rooms up on the website this morning. I think I'm going to switch back to just doing a set live rooms each day rather than coming on for the news, because what we tend to do when I come on for the news is we sit there and we just watch the news. I might as well talk about what happens to the news when I come on at any time. There's not much point in staggering these live rooms, I don't think, just to fit in with news events. It was good, but not as easy for everybody to get to because obviously the times switch around a lot. So I'm going to go back to just normal schedule. So I've decided to come up with a kind of one morning, one afternoon, one morning, one afternoon, and one morning type schedule, just to make everything a little bit easier. So everybody knows when stuff's going on. So Tuesdays and Thursdays, I'm going to do New York sessions. And then Mondays, Wednesdays, and Fridays doing London sessions, basically. So just so it kind of splits the time. So Mondays, obviously, will be a week ahead type fundamental news overview. And we'll look through all the FX pairs, see what's happened with absolutely every FX or wherever FX pair is, what's going on. Tuesdays, do a New York session where just trade the open and do any analysis on anything that needs doing. But obviously, the main analysis will be done on a Monday, so not a lot really changes from one day to the next. Then on a Wednesday, we'll do same as Monday, a detailed analysis, basically, go through all the FX pairs and see what's happened, what news events have kicked in, what's happening midweek. Thursdays, another New York session and any FX analysis based on any news. And then on Friday, I will do DAX and FTSE trading, so start a little bit earlier and trade the open. And then obviously a recap of what's happened this week. So look at what fundamentals have had an impact on what pairs. And then rinse and repeat. So it's a little bit more structured, basically, because Mondays, obviously, we want to look at what's coming up, what's going to move. Middle of the week, what's happening so far. End of the week, recap on what's happened based on what we were expecting to happen, type thing. Yeah, and in between, we'll just slot some opening range breakout, SIH type trading in between. So that's what I'm going to be doing. And then it keeps it the same. And it also helps my schedule because flipping about all over the place makes it very difficult for me to figure out what the hell to do as well. So just a quick look at what's happened over the weekend. Obviously, with the European parliamentary elections yesterday, it obviously didn't go as expected for Macron. So he has basically let's try and find out where it actually happened. Is it not in red? Surely. No. Oh, this is Friday. Okay, where are we? No, I obviously didn't bother to report it. So basically, over the weekend, obviously, it all went wrong for Macron in the European parliamentary election. So he's basically dissolved government and gone for a general election type of thing. So what's happened, which is very rare in FX, is we've had a gap down on the euro and it hasn't filled. So it's very, very rare these days to get gaps. We just don't get them in the FX markets. They're so much more stable. So we've got a gap up opportunity on the euro. So this gap down is the market obviously gapping on uncertainty in the Eurozone with what's going on in France. We've had a big push down this morning in the Asian session on all euro pairs. I got out of my euro CAD, which was the trade from there on Wednesday. Why did I take that one? I can't remember. There was a reason I took that. So yeah, that's basically it was an ADR basically, wasn't it? But got out of that this morning. I suspect we will probably fill this gap today. We'll see what happens, but if we don't, there's a good chance we'll come back and fill it tomorrow, because this is just a knee-jerk reaction and just a panic exit from banks and institutions while they're seeing what is going to happen with this this move. So good opportunity for longs on these. On the FTMO account this morning, I've just taken a long on the euro pound. As you can see, just going for that quick gap fill play. So it'll work or it won't, but you know, there's a good chance I think that they'll come up and fill the gap at some point today. So there's an intraday opportunity there, just for a small play back up into there. So you could drop down onto lower time frames, wait for a reversal alert to go in, and then grab the reversal when it starts, and then obviously just quick stop play basically. As you can see, ADR wise, the only thing that's hit is euro odd. So that one is an ADR hit, but it's obviously with this gap, you can't really read into that being an ADR because we don't know. It's not normal movement, is it? So we are right down in this low here as well. You can see how hideous this market is at the moment on this chart. Look at it. Literally, we are not going anywhere at the moment. This market is just dead. It's bizarre. Absolutely bizarre. But anyway, so that's the only ADR we've got today. There's a few RSIs, but I'm going to go through every pair this morning anyway, so there's no point in concentrating on the RSIs because I'm going to be looking for all of them at some point today anyway. So that's the weekend news. This morning we've had GDP for Japan, ever so slightly down on forecast, the annualized, but no idea what impact anything has on the yen at the moment. So there you go. Euro gaps lower following increased political uncertainty. So apart from that, over the weekend, I say apart from that, which was quite huge, there's no other news. Lagarde on Friday afternoon came out and said the path to 2% inflation won't be an entirely smooth ride. So again, just kind of hammering home the fact that don't expect we're going to do a 0.25 drop every month. Yes, we've done our first one, but I don't think it's going to come down very, very quick. So just kind of preparing the market. You shouldn't be really selling the euro that fast because we're probably not going to drop interest rates quickly. So we'll see what happens when the next CPI data comes out. But Lagarde just basically making sure there's no collapses in the euro. And obviously what we saw with that euro interest rate decision, well, you can see it on this chart. We've had an interest rate drop. Not batting an eyelid, is it? So the market really not interested in selling that euro off at all. Obviously, it's dropping, but that's because of the gap down. But yeah, very, very, very bizarre. What's going on at the moment? Morning, everybody else. Evil, Najorj, Neo, Franco, Chucks, Baggy, everybody else haven't said hello to. Right. So this week, it's there's your parliamentary elections. So today is a no news day. There's absolutely nothing going on today at all. Dead. So market will just do what the market wants to do, and I suspect something like that. And we'll see what happens today, but there's no news at all to impact, so there's nothing to worry about for timing or anything. Tomorrow, same thing, no news. We've got the claimant count, doesn't tend to do an awful lot. We might get some movement on the pound in the morning, but doesn't tend to do a lot. And that's it. So bond auctions are coming out tomorrow evening, which sometimes the bond auctions do move, most of the time not, but very little to worry about tomorrow either. So it all kicks off on Wednesday. So this is where we actually start the news for the week. So Wednesday morning, we've got the GDP for the pound. So we are forecasting a drop month on month. If that comes out as a positive, we'll probably get a bit of a rally off of the pound. If that comes out as a positive as well, that will give the Bank of England more reason to drop interest rates, because if the GDP is going up, inflation is coming down, it's all good news. So yeah, it gives us more chance to drop that interest rate faster. So while that would be a positive normally, there is a chance that even if that comes out as a positive, it could have a negative impact, because the market's getting ready to drop that pound when the interest rates come down. Bear in mind what's just happened to the euro. The euro's just dropped its interest rates. Didn't really do a lot, did it? So you have to kind of take it with a little bit of a pinch of salt at the moment. Biggest news we've got, I mean, Wednesday is just US dollar day. We've got the CPI numbers coming out. Obviously, the main leading indicator for interest rate change. We are forecasting very little change on this. So the year on year, we're not forecasting to change. The core CPI, we're not forecasting to change. Overall, it's looking, they're expecting a drop. If any of those come out as green, watch the US dollar. Yeah. But bear in mind, obviously, this is the precursor to FOMC. So the likelihood of any CPI number coming out is going to be that until FOMC. So the evening, obviously, is when we get the fund rate coming out. That's going to be 5.5%. The statement and the press conference is where the market's going to move. So this is the big one. I say the big one. I really don't think the Fed are going to come out and say anything new. We're data driven. And if this data comes out as forecast, they're just going to turn around and go, still can't change interest rates. However, if that CPI number goes up, there's a possibility they will push the interest rate drop back until 2025. If that happens, we're going to see bullish movement on the US dollar, potentially. So quite a big one there. So what you would expect to happen is 7:30 press conference comes out, load of waffle for a bit. Then we tend to get the press conference where the questions are asked, and then usually somewhere between 8 to 8:15, that's when the market tends to take off, because we know the numbers, we know what the plan is, let's get the orders in. So that's when it tends to kick off. So it can kick off during the press conference, obviously, if the Fed come out and say something. Powell could come out and say something massively bullish, like, even though that CPI number hasn't changed, we are forecasting the next two to be drops. Therefore, there's a good chance we'll drop interest rates in September. Obviously, the US dollar is going to tank. So there is a chance that something might happen, but usually it's after. We got Macklem speaking straight afterwards as well. Unlikely that anything will be said there that will impact much, because obviously it's all going to be about FOMC and that. So then we go into the unemployment rate on Thursday morning. That's forecast to come down. The Aussies and the New Zealanders have given no indication as to interest rate drop at all at the moment. If you look at the fundamentals at the minute, we're sitting on 4.35. 3.6 is miles too high. No way we can drop interest rates being all the way up there. Same with the New Zealand. We're up at 5.5. They are coming down fast, inflation numbers, but still way too far up. So the New Zealanders have even hinted at a possibility of another rate rise this year. So if that happens, you do not want to be selling any Australasian currencies. Want to be buying them. So that unemployment rate, quite important tomorrow. They are forecasting unemployment to come down, which is bullish, but we'll see. We'll see what happens to that. PPI on Thursday afternoon, along with the unemployment claims. So PPI is a producer price index, which feeds into the consumer price index, which feeds into interest rates. So this is another leading indicator along with that. So if that jumps tomorrow and then that jumps, it means that they are definitely not going to drop interest rates. So important figures, both of these. Forecast to come down, though. So we'll see what happens. But there's going to be volatility around that, and obviously the unemployment claims. We've got more bond auctions, which, again, hit and miss. Occasionally you get massive moves on these bond auctions if they sell more than expected. I suspect they'll sell less than expected this time round because the Japanese are not buying them anymore. Well, they're buying less. So we could see a slight negative move on the US on those, but we'll wait and see. And then Friday is the big one for the Bank of Japan. No idea what they're going to do. No idea what impact it's going to have. And no idea what they're going to say about forward guidance because they don't know what the hell to do because obviously nothing they're doing is working and they are just spiraling. So that's going to be an important one on Friday morning, but what impact it's going to have, we'll just have to wait and see. So again, until we get some indication as to what is the plan for the Bank of Japan, I'm just not interested in trading it because just too erratic, impossible to pick a direction on it. It's just a very, very difficult thing to trade at the moment. So we'll have to wait and see. Michigan on Friday, obviously, they tend to use this to balance the books. So we tend to get quite a lot of movement off of Michigan. It's very hit and miss, though. Sometimes it does nothing. Sometimes we just get 150 ADR off the back of it. So they use it to just dump orders. So big one there, basically, 3 o'clock on Friday afternoon as well to finish the week off. We've also got Lagarde speaking in the evening. But so that's it. So it's a big week this week. Obviously, Wednesday is the main focal point of the week. It's all about CPI and interest rates at the moment, or it should be. And then Thursday, very, very busy as well with PPI for the US. And obviously on Friday, we've got the Japanese. So we'll see where we go from there. The yen's basically, obviously, we had a big rally again on Friday. So massive day Friday across the board. You know, it's back up in that range that we broke from. So remember I said last week, market structure on this is bullish. So this move that we saw, and everyone was like, is this the start of the next yen push? I said there's a good chance it is going to be just a pullback profit take, and it looks like that at the moment. But until we break that high, this could be structure shifting back to the downside again. But the more likely move, I think, is we are just going to hold within this intervention range and just muck about in here moving forward, which is why I say it's very difficult to pick a direction on this thing, anything to do with the yen. So I'm going to go through all the FX pairs now, but I'm going to start off with all the yens because I'm not trading them and I don't know where they're going. So it's up to you what you do with it. Bear in mind, obviously, yen positive swaps. So you want to be longing everything against the yen if you are going to hold it because it's going to pay you. If you're going the other way, you're going to pay a lot of money holding the position. So there's a good opportunity or a good argument for basically taking every RSI that you see at the moment because there's a good chance it will play out. But again, as you can see here, I mean, it didn't quite hit there, but, and again there, there's also a good chance we'll get what we had before, which is nothing. Yeah, so you get into a trade and then the RSI just resets itself because there's no reason for the market to do anything with this at the moment. There will be on Wednesday, but so we'll see. But you know, New Zealand dollar yen, we're out all-time highs now. Pound yen, we're back up holding in the range. Euro yen, we're holding in the intervention, the initial intervention there. So don't know where it's going. And I wouldn't really want to get involved at the moment. So Swiss yen just up at those all-time highs as well. CAD yen stuck with the US, and Aussie yen, same as New Zealand, undone the whole lot. So just sitting around. So if you want to take any extensions on it, obviously, for me, the lower extensions to buy against the yen is probably the best way to trade the yen at the moment because at least you're going to get positive swaps on it. So if you're sitting around in it for 2 weeks and it goes nowhere and you decide to get out of the trade, at least you're going to make a little bit of money on it. But you know, so all the yens basically just stuck. Morning, George, Callum, Ismet. So yeah, so those are your yens. Aussies. So what? Well, Aussie CAD specifically. As you can see, we are just stuck again. So I've had a few trades on this, all worked out very quickly and easily, but taking a long time to go anywhere. So the bias for the CAD at the moment is obviously we've just dropped interest rates, and as you can see, again, did not do anything. So we've dropped interest rates last week on the CAD. We dropped interest rates last week on the euro. They're not going anywhere. Nothing's happening. So we are just stuck sideways on this at the moment. Obviously, that big move that we had on Friday off the back of non-farm payroll, it helped a lot, obviously, with the CAD. Obviously, the unemployment rate didn't change, but the US moved everything, basically. So whether or not that holds, we'll have to wait and see. Yes, it was positive news slightly on the non-farm payroll, but the unemployment rate wasn't. So there's not really any real movement, any need or reason for this massive move that we got on Friday, apart from unwinding a load of positions and banking a load of cash and getting a load of entries done that you needed to get done, which is what I think this was. So I've got a long on at the moment, and I'm just looking for a V-shaped recovery on this. It was an RSI extension. So there's the entry long. The fact that it hit this low and now it's starting to bounce kind of says, yeah, we are just sticking in this range. There's no fundamental reason for that to be strong or weak. There is a range for that to be weak, which means that this will be going up. So, it's, again, with any of this sort of rangy stuff, any extensions you get are likely to work out. There's a trade there, look. Yeah, there was one there I got out of, and that one there I also got out of because we went 4 or 5 days and just we're not going anywhere. If it doesn't go anywhere after a few days at the moment and you've got an opportunity to get out, it's worth getting out because you just are likely to sit in a range. This market is flat as a pancake at the moment. And we're going into summer trading as well. This is the worrying thing. If it's like this when the market's usually busy, what's it going to be like in July and August? It's going to be awful. We probably get down to like single digit ADRs. I don't know. But anyway, so got long on that at the moment. That's an RSI extension. So H1M5 mean reversion opportunity last Friday in on that. Aussie dollar Swiss also extended. You had an opportunity to get in there. We just had a reversal alert on this one. So the Aussie dollar Swiss, again, I'm not trading Swiss franc at the moment. I just don't know what's going on with the Swissy either. And what worries me about the Swissy is they will just change interest rates without telling anybody like they did last time. As soon as they did that last time, it's just hell. The market doesn't expect it. You get these massive, strong pushes, and it just goes off for ages. So with the Swiss franc, if they drop the interest rates, that will weaken the Swiss, and you're going to get that type of movement. So that's the sort of thing you need to be worried about. So at the moment, I've just taken the opportunity to step back on the Swiss and watch it. I want to see what happens with their next interest rate change. If they don't change interest rates, I think there'll be a little bit more stability coming into it. So I'll probably jump back on the bandwagon again then. But just worried about interest rate changes at the moment on that, unexpectedly. So Aussie dollar longs, you had a long opportunity there. And again, we are stuck. So again, news, nothing, news, nothing. That's the market structure at the moment. It's terrible. Very, very, very difficult to get out of positions when you sit in them for a week because there's no reason for the market to move them. So the bias on this one, there isn't any. Slightly more bullish on the Australasian pairs. So the Aussies and the New Zealands, there is a good reason to be long on them. They are not changing their interest rates, whereas everybody else is likely to. But as we saw from the euro and the CAD last week, they dropped their interest rates. The market just did not move. So the normal bias you would expect on this would be long because the Aussie's not changing the interest rates and the Swiss have already done it. So yeah, extensions to the downside. So absolutely nothing wrong with that entry there. Add, and if it does come down and retest these lows, that's your position, isn't it? It will bounce down here. If it doesn't bounce here, which is ADR today. So you've just had a reverse alert on it long. Market has pushed up a little bit bullish today. the reason for this move is likely the euro. Obviously, don't forget the Swiss and the euro are very closely linked in movement. So if the euro's tanking, the Swiss will be tanking. If the Swiss is tanking, obviously the Aussie's going to push against it. Everything's going to push against the Swiss. So at the moment, difficult one. Aussie, New Zealand, that's broken down nicely. Why have I got so many artifacts all over my charts today? It's a weird... Oh, it's because I switched accounts. I know why. Sorry. So yeah, Aussie, New Zealand, that's broken down. So we were looking for this big drop, basically, after the rally, which obviously happened just because I got out. So at the moment, again, this one, very difficult to call a direction on it. They're both bullish. So it's who's going to be the more bullish. There's no reason for anything to be going massively strongly in one direction or the other. That interest rate change on the New Zealand dollar, no reason for it. That interest rate change on the New Zealand dollar, no reason for it. Or rather, no interest rate change, no interest rate change. Market goes nuts anyway. But yeah, so overall, whenever you have a bias long and long on Aussie and New Zealand, usually the Aussie wins. Bigger economy, bigger country, bigger GDP, bigger everything. They are both commodity pairs. So when things like gold and copper and stuff starts to rally, these both rally. But if you both rally at the same time, obviously the bigger one tends to win. So it's difficult to call a direction on this one at the moment. You can kind of trade it in either direction, really. But it's, again, as everything, it's stuck in these cycles of news and nothing, and news and nothing, and news and nothing. Yeah, so news, just waiting for the next news event. So saying that, though, we've got some fairly decent market structure looking like it's forming here. Big old propulsion gap to come up and test. So push up into there. So if you longed anywhere down here, you're in profit at the moment. If you got in long from there, probably coming back to a break even. But that's your target to the upside. Aussie US, again, RSI extension to the downside on this. Got a long on this one. Just looking for a V-shaped recovery on it. I don't see any reason for this US dollar strength. So assuming it's just going to unravel. But I'm long on that one at the moment. This one, again, it's been... Anything you're trading at the moment against the US is usually pretty easy. It's just straight in, straight out all the time. Almost, a day or 2 days, really, you're holding it. It's moving absolutely beautifully at the minute, but not really going anywhere. So, worst case scenario, as you can see on the chart here, two entries, and these are all singles. So, long H1M5 entry, we'll see what happens. But if it does break down, we've got monthly low there at that propulsion. So we know that's where they bought from. We broke the range, propulsion gap. We retested it quickly, pushed away. We retested it again, pushed away. So 225 ADR, the monthly low, is where you'll scale into. If it gets all the way down to there, you'll be looking at a pullback somewhere up into there. But we'll see what happens with that one. So I'm long on that at the minute. CAD Swiss, again, Swiss franc, I'm not in at the moment. This is really extended. What 4-hour RSI extensions have we got? Euro pound. So it's euros mainly because of the drop today. So we're coming down into a nice accumulation here on the CAD Swiss. So we sat around here for weeks and weeks and weeks and weeks. And then obviously we had some news. We finally broke away these propulsion gaps, obviously forming the order that drove the market up. We price discovery, we found up here to trade. We sat around, we traded up here for ages. Now we've broken back down below that monthly low, back into this accumulation. So chances are we're going to push back up into these propulsion gaps up here. And if this is going to be a structure which is going to remain short, we'll be coming up into here somewhere before we drop back down again. So CAD overall, we should be now, we've had our first interest rate drop, slightly bearish as a stance on the Canadian dollar. However, obviously, as we know, it's not going to be a complete collapse on anything. Otherwise, we would have had a load of movement. So market factored in the drop on the CAD prior to the CAD interest rate. The Swiss franc was powering up at the same time, which is why you got this huge move. So I suspect we'll pull back up into here, especially now we've had that weakness on the euro. That's going to weaken that Swiss franc. So there's a good opportunity for the market just to undo this. So they'll be looking to profit take this at some point, I reckon, in the next week or so. We've had a week of just nothing. So, you know, you're sitting in this accumulation. Basically, the seller's not going to let it go through that level. So push up into there. So that's a long opportunity. All the rest of the ends I've covered. Euros. So euro, obviously first rate drop last week. So with the euro now, we're down to 4.25. So we've had our first drop. We're at 2.6, ever such a slight bounce on CPI. So as Lagarde said on Friday, the path to 2% is not going to be particularly quick. We've got down to 2.6, absolutely fantastic, but we are starting to find a little bit of slowdown now. So if it's going to go do that on the way down, interest rates will match it. So the Lagarde said months ago, when we do our first drop, do not expect us to drop every month. The most likely path will be drop interest rates, don't do anything. Drop interest rates, don't do anything. So we've dropped here in June, July, no drop. August, drop. September, no drop. That's not cross. Cross. So that's probably the path that we're going to take. But it's all going to be driven by that. So stance on all euros fundamentally is at the moment a short. So we'll have to wait and see how that sort of plays out. So as you can see, dropping. Australian dollar and New Zealand dollar bullish because they're not dropping interest rates. So this is definitely bearish. So I'm still short only on the position trader EA at the moment on all euro pairs. But I'm going to see what happens. I'd much rather be taking shorts than longs. But if there is a really good opportunity to go long, I will do. But as you can see, this is normal market movement at the moment. We're not going anywhere most of the time. So if you get in to a long, for example, there, and it doesn't pan out, you're going to scale in and usually get an opportunity to get out very, very quick on euro pairs. It's the second most traded currency on the planet. Yeah, pound US dollar is the most traded, most liquid currency pair on the planet. After that, it's all about euros. So this is why you get a lot of this type of movement, because there is a lot of transactions going through it, buys and sells. So it's going to go up and down all the time. So at the minute, I'm staying short only. So I'm looking for ADR extensions to the upside. I'm looking for RSI extensions to the upside, opportunities to get short. As you can see, the last short opportunity was there. And then there was one there. So they're not going to come around as much if we haven't got a bullish euro. So we'll wait and see. But you can trade it in any direction, really. I'm choosing at the moment just to go short. But I don't see a problem. But as you can see, there's no signals on this at all. It's not going anywhere. Yeah, it's just loads of this. And there's no real reason, I don't think, why this won't just continue. You know, yes, we are starting to drop interest rates, but don't forget the rally we had was every month, regardless. It was 0.25% or maybe even 0.5% every month on the rally. Sit there for 12 months. The come down is going to be a lot slower than the rise. So there is an argument for trading all these in both directions at the moment. The way you describe the euro odd, it's range traders paradise. Yeah. It is a range trader's paradise at the moment. The reason I'm short only for the moment is I don't know what impact interest rate drops are going to have. Not just for the euro, for all. Yeah. So we just dropped the CAD last week. We've dropped the euro last week. We're not going to be dropping the US dollar this week. We are going to start to look at dropping the pound as well. So I want, until I know that interest rate drops are having very little impact on currencies, I'd rather go with the way that it has done for the last 200 years. When you drop interest rates, currencies devalue. That's what happens. It's fundamentals, it's economics, it's the way of the world. Yeah, that's the norm. As we know, this is not the norm at the moment. This market is not the norm. We're recovering from the pandemic still. We've got uncertainty all over the world, and we've gone through the largest, fastest interest rate rise on the planet. And then we've sat there for 12 months and done nothing. I don't know, and I don't think anybody knows, what impact interest rate drops are going to have. So I'm just erring on the side of caution. And if I miss a load, if this goes range bound for the next month and I miss 10 longs, I miss 10 longs. I'd rather not go long for what we normally see in interest rate drops happen and be stuck in loads of squeezes on the euro. If it pushes and I'm short, that's fine. I've got the fundamentals behind me that when they drop interest rates, it's going to come down. So worst case scenario, if I get into something short and it pushes against me for a month, I know I've got an interest rate decision coming within 4 weeks, which should undo that move. That's the only reason. But I think personally, we are going to see that. I don't think we're going to get a big drop, but I don't know. Yeah. So it's safer to do that, I think. But if I was a betting man, I am a betting man, but if I was being less cautious, I would have no problem longing the euro. So I think you can take it in either direction. So ADR hits to the downside. We just had an ADR hit on this today. I don't think there's any reason wrong with doing that. Look at the support. Yeah, all the weekly and the monthly lines. Yeah, you've got so much support. When it breaks out of one of those, yeah, you are going to get a week or so of that. They'll undo it. They will undo it on this, I think. So I don't see a problem either way on it. Euro CAD, very much the same. Look, I mean, it's just sitting around, but it's moving very contracted sideways. But when you get big moves, they get undone. You know, the euro is always going to move very fluidly because it is it's one of the majors. So it's the safest stuff to trade. Euro, US dollar, pound, and CAD are your safes. Your miners, the Aussies, the New Zealands, the Yens, the Swiss, they are more difficult to trade because they're less liquid. Less liquid means bigger move, bigger squeeze. Just the way it is. So, safe. If you were going to be safe, you would limit yourself to just trading the four majors, the four big majors. But, so Euro CAD, same thing. You've got a bearish stance against a bearish stance now. Yeah, so the euro's dropped its interest rates. The CAD's dropped its interest rates. Neither of them really have done anything. Yeah, so this chart is the absolute explanation of what's going on in the market at the moment. We sit around waiting for the interest rates to change on the Canadian dollar. There we go. We sit around waiting for the euro rates to change. There we go. Non-farm payroll comes out, collapse. Yeah, interest rates. The main fundamental driver of the FX markets, not in control at the moment. We are expecting it to be, but this is now a bearish against a bearish stance. A bearish against a bearish stance equals a range. Yeah, if they're both weak, neither of them is going to drive massively strongly against the other, is it? It will do on news, but I think probably it will undo itself as well. So again, Euro CAD, trade it in either direction. There's a long opportunity there. Back up into the gap fill and into that propulsion. You've got a support coming up at ADR. Yeah, propulsion break at ADR. If that fails, you've got a billion support resistance areas coming up where it could bounce. There's just so much chop for everything to get through at the moment. The market, when you get into clear air, the market gets a little bit of a rally, but then it just undoes. It's beautiful. It's market structure. This is what we crave, isn't it? Market structure, because market structure is easy to trade. Because if it goes up and it goes down, you cannot fail to make money out of it. So, but Euro CAD at the moment, again, don't have a problem really trading it in either direction. As you can see, I'm not in this at the moment because I've decided to go short only for the moment on the Euro. The CAD, I don't think doesn't matter. Yes, it's going to be weak, but that gets pushed around by the US dollar, and the US dollar is going to do what the hell it likes anyway. So the CAD, I've got less bias on it, but the Euro definitely at the moment. So again, this one at the moment long, H1 RSI extension, and obviously you've had a reversal alert on this morning, so you should be in it long already. Yeah, and it's retested as well. That would be my intraday target, 125 ADR. I doubt it'll hit it today, but today, tomorrow, maybe back up there. Euro Swiss, again, very difficult to trade. So the Swiss moves with the Euro. Bit of a difficult one, this one. Again, we've got the gap fill opportunity at the moment. That monthly low caused by that news spike. And we've got, obviously, this accumulation here. So there's many areas this could go from to the downside. I think they need to undo some of this at some point. But that would mean being long on the Euro. And with what's just happened with the European parliamentary elections, probably more downside to it. We get any kind of trouble kicking off anywhere, that Swiss franc's going to rally. It's going to be down there. So I'd much rather be short on this than long. But trying to get an opportunity to get in hard. Gap fill, if we do the gap fill, short that. Yeah, you've got lots of resistance coming up. 200 ADR, 225-ish for shorts. You've got propulsion gap, short. Yeah, any RSI extensions. So much rather be short than long at the moment on that one. Euro pound. This one I've got a long on at the moment. Obviously, it's gapped down on me, so I'll be taking another long in a minute when we get some bullishness on this. So yeah, I'll be getting a second long on that. Why is that not taking another long? Let me just quickly check my VPS. Sure, it hasn't done any updates. No, that's fine. My terminal is frozen. How's that one? Bear with me a sec. Going to want to update those, isn't it? Yeah. Okay. Right. I will be taking another entry on that virtually straight away. There we go. One thing you got to check. MT4, the reason I use MT4 and not MT5, as you know, it's more stable. They don't update it very often. The problem with MT4 is when they do update it, it's a forced update and it says old version in the terminal. In the bottom right-hand corner where you've got your connection status, it says old version. They won't let you trade. When you get to a weekend and the market reopens, if you're on an old version of the terminal, the brokers will stop trading. So you have to check. It's one thing you've got to keep an eye on. There's no way of really automating it. Every now and again it happens. It's very rare. But it does happen every now and again. So just be aware of that. So I was looking at this thinking, why have I not taken a second entry? We are miles away. We've had a reverse alert. We've had an RSI cross. There we go. So, yeah, looking for a push back up into the gap at least. In fact, I'm just going to TP the gap. That'd be 550. So it's only going to be about $350 or so, but playing the gap fill basically on the euro pound. Euro New Zealand. So again, New Zealand dollar, Australian dollar, both no reason to be bearish on them at the moment, long term anyway. Obviously, they'll have points where they're just weakening, as they always do when they take profit on moves and things. But overall on this one, would want to be short only, really. I'm not trading Euro New Zealand at the moment. I'm trading Euro odd. Typical. So Euro odd is the one that did not get an RSI extension. So I'm not in that short. Euro New Zealand is the one that did get the RSI extension, but I'm not in that short because I'm trading Euro odd. Typical. So if you did get into that Friday entry, well done. You're probably out now. But yeah, loads of propulsion gaps to the upside. I think the market's going to struggle to get through this at the moment. Weak euro, basically. So any extensions to the upside. So you had an entry there on Friday. You've had from the entry, which would be somewhere around there. You've had an ADR out of it. So easy exit already today. So shorts on that, euro, US dollar. So this one, of all of the euro pairs, if you want to trade both directions, this is the one. Yeah, because the US dollar is going to be pushing around a lot. There's no reason to be bearish or bullish really on the US. It's sort of neutral to slightly bullish. Euro should be bearish now, so the bias would be short. Again, I'm short only. I'm out of that one this morning. On Friday on the non-farm payroll. Obviously could have got more out of it. You got propulsion gaps to the downside. Any of these will cause a long. So your 20 RSI extension on the hourly, and this is extended on the 4 hourly as well down to the 20 level. So big, strong push down on this. But as you can see, lovely market structure on it. It's just going up and down. So if it goes down, buy it. If it goes up, sell it. Very easy. Just H1 RSI's long. That's a really nice long at the moment, that one. My euro exposure. I've only got the one on at the moment. Kind of missed it. I suppose I haven't really. We've just had the reversal, haven't we? I'm getting into that. I think they're going to undo this non-farm move. So I'm just going to target sort of lower end of that propulsion move in case we find a load of sellers. If we get back there, that is, and we find a load of sellers there, obviously, that's where I will get out. But obviously, if this non-farm move is a load of strength for some reason coming into the US and it decides to just flag and break, there's plenty of opportunities to scale into this sort of within 200, 250 ADR. So it'd be 2-3 positions max, really. And then if it gets all the way down there without any profit take on that, it's going to ping back pretty quick, isn't it? We got so much news this week as well. So there's your euros. So I'm more short than long, but as I say, like that's a prime example. If I see a really good opportunity, I'm still happy to go long on the euro. But long term shorts. In regard to RSI2 strategy, the RSI is based on daily. What lower time frames you use for entry? Wherever you want. Hourly. Up to you. But you're trading the daily chart. If you're trading RSI2 on the daily, you're trading the daily time frame. Whether you get in on the daily, the hourly, the 4 hourly, whatever, it's up to you. Doesn't matter, does it? You're trading because the RSI is extended on the daily, which means you're expecting price to go up. How you get in, what signal you use, what time frame you use, up to you. I'm personally using the hourly because I want to see a decent amount of movement in my direction. But I mean, there's no right or wrong, really. I think hourly is a good time frame to use because you're going to get more confirmation, basically. So if you look at a 15-minute chart, that reversal alert there, and then you look at an hourly chart, so 15-minute reversal alert there, 5-minute reversal alert there, because there's been a big, strong hourly push. When that crosses above a 9 or 5, whatever, 5 I think I'm using, get in. Just to give a bias, basically. So whichever you prefer, but I'm using hourly. Morning, Robert. Franco, my feeling for this week, double one, roll of the dice, double one. Your feeling for this week is double one. Cut my focus to just 2 pairs with crazy volatility, easier to keep track. Yeah. No, they found me getting the bunker fast. Who's found me? I haven't got a bunker. Morning, Steve. Morning, Agosa. I'd like a bunker. That'd be quite good. Only for fun. I don't think it's going to help much, is it? Pound odd. So all pound pairs, difficult at the moment. So if we look at the fundamentals for the pound, we have CPI next Wednesday. And then we have PMIs and the interest rate change on Thursday. So until middle of next week, with the pound, it's very difficult to know what to do. So right now, we are the interest rate leaders. The inflation leaders. So our inflation figure, we've done a fantastic job. We've got it down to 2.3, come down fast. Our interest rates are second highest in the world. Yeah. So there is the biggest possible argument for an interest rate drop on any currency pair on the pound than there is on anything else. Yeah. However, we have been told by the Bank of England, we're going to hang on, wait, and just make sure. Yeah. So that CPI number that comes out next Wednesday is going to be the we're sure number, or the not sure number, but we won't get that sort of drop. If we get that sort of drop, we're in big trouble because we've well overshot inflation. We've got a general election in the UK on the 4th of July. So the current Conservative government will be pushing the Bank of England like crazy to drop interest rates because they're going, hey, look, everybody, we've done an amazing job there. We're going to bring your mortgages down because the interest rate is also going to drop. If they can get the interest rate down by the election, which means next Wednesday is the only opportunity to do it, they will do. So the concerning thing at the moment is the market has not factored in a drop on the pound. Yeah. If next week that CPI number comes out negative, the Bank of England are going to say, yeah, we're definitely doing it in July. There is a possibility, although it be slight, that they will do it next week. I don't think it will happen. But if they do, this thing will be off the bottom of your chart. You won't be able to see it. It'll be 200-300 ADR. So I'd much rather be short on pound than long going into next week. I'd like to be out of all positions on the pound by next Wednesday. But at the moment, obviously, as you can see, the pound is weakening. Yeah, so we are starting to look like the market is gradually forecasting a drop in the pound, which it will do when the interest rates start to come down. And because our interest rates are so low, our inflation rather is so low, the drop from there down to 2.5%, roughly where we will probably get to, could well be a lot faster than the other countries. So next week is a very, very critical point. This CPI number annually is going to be really key. and what they do next week is going to be obviously very key as well. So we've got, CPI coming out next Wednesday. Then next Thursday, we've got PMIs. And next Thursday, we're dropping the rates. So if that comes out lower than expected and the PMIs on the pound, drop, that pressure is going to be huge for them to drop rates. It's going to be hard for them to do it if you get the news at 9:30 to reorganize an interest rate drop within a couple of hours. But who knows? They may have already factored it in. Bailey's been very, very quiet. So upshot is, again, same as the euro. Rather be short than long, but we'll have to wait and see what happens next Wednesday. So with all the pound pairs at the moment, we've got the drops starting to come in. That's a beautiful opportunity for a short there on Friday, which if you took it, well done. If you didn't, unlucky. I didn't get into that either. I'm in pound CAD. Oh, I'm in pound New Zealand. That's why. Yeah, because I'm not trading pound odd. I'm trading pound New Zealand. So lovely opportunity for a short on Friday. H1 RSI extension, M5 reversal alert or entry, however you want. But it is also a breakout. So we've got this range, obviously, that formed here. Tested, range bottom. So we're sitting there at the moment. We have just broken out of the range. So there's a chance that this might retest and go. However, more likely next week, it's going to become bearish. So I think this is probably a false breakout. And again, we'll get an A-shaped recovery on this today or at some point this week. So rather be short than long. At the moment, it is slightly bullish, holding up. But you're coming into this big propulsion area where we accumulated and broke down. We came back, retested it and dropped. So market structure shifted short from there. So we're just coming back up to where we kind of started that short trade back in April. So I think probably more likely down than up. And don't forget, the Australian dollar and the New Zealand dollar are not bearish in any way, shape or form. So if that is strong, that comes down. Yeah, so it's more bearish than bullish. Pound CAD, stuck in it, have been stuck in it, as you can see, since middle of May. Again, just grind and stuck. News event, stuck. So the Canadian interest rate obviously weakening makes this particular pair sort of bullish against bearish, or rather neutral against bearish. So it's grinding up at the moment, but obviously we've got that news coming for the pound next week. So I think there's a possibility this week that we'll see some weakness start to creep into the pound as the market starts to get ready for that news next week. We've got this big propulsion move to come back down and retest as well. So I think there's a good chance this will drop, but it could well continue to rally. So we'll have to wait and see. But I'm short on it at the moment. Been short on it for, as you can see, ages, just stuck in a bit of a squeeze on it. I've been taking drawdown control. So easy to get out of. Yes, average is 150 ADR. So if they come back and retest this accumulation, I've got an exit opportunity, but just can't get any bearish traction. That's all we've had. And I didn't get out on that. Wait and see. Pound Swiss, again, same as the Euro Swiss, pretty much the same pair. If you look at it, not really into the Swissy at the minute. Right now, it's just doing the same thing, push, stuck, push, stuck. So you got this lovely monthly low coming up. You've got a nice area of support coming up down there. You've got targets to the upside propulsion gap. You've got targets to the downside propulsion gap. So it could go either way. So at the moment, RSI obviously is telling you it's a long. You got divergence. There's many, many reasons to long this. Fundamentally, though, next week, it's probably going to come down. So it's a difficult one to trade. And the Swissy, obviously, we've got no idea. Swissy will sit around and go mental, and then it will just sit there and do nothing. Yeah. Missile shoots the wrong direction. Everybody says sorry. Yeah, that's the Swiss. It's just erratic. So the Swissy rate announcement isn't, yes, Thursday. is next Thursday. So I thought it was the week after, but it's not. It's next week with the pound, same day. It'll be a fun day. So yeah, we're going to find out what they're doing with their interest rates. They won't tell us. They'll find out. We'll find out rather. So yeah, next week for the Swiss. No idea interest rates on the Swiss. No idea if it's bullish or bearish. Next week, if they drop the interest rates again, we'll know. So they are gradually dropping their interest rates. But again, same as the euro, drop it, stay for a month. Drop it, stay for a month. That might be what the Swiss are doing. But their inflation figure is below target. Their interest rates are below target. Yeah, there's just no reason for them to do anything. Their GDP, as usual, is just stable and going up. Everybody's got a job. Everybody's got money. You just want to live there, don't you? But their currency is super erratic. So no idea on that one at all. Not interested. Pound New Zealand got out the longs on Friday. I'm now short. So got out of the Pound New Zealand on the move on non-farm payroll. We've come straight up into resistance. Yeah. So looking for a push back down into there now. So shorted it on Friday when I got out the longs virtually straight away. And looking for an A-shaped recovery on this one. The pound went, as you can see, we had obviously that crazy move, got out the shorts on the pound US dollar, flip long on that as well. Let's put a target on that one. So yeah, like this short at the moment, basically, because we should be getting some bearish moves on the pound coming up. And New Zealand dollar obviously is bullish. So overall stance that way. So any extensions to the upside, looking for short opportunities. Got stuck in that long for far too long. But there is a chance that this will push up and try and retest this propulsion and try and get back into this previous accumulation. So don't mind scaling into it a little bit, but the news should be driving this down at some point in the next week. And pound US dollar. So this one you can trade really in any direction. Should be pretty safe in the fact, same way as the euro US dollar. It's the most liquid pair. It goes up and down all the time. You will get the odd point where you get some bullish news on the pound linked to some bearish news on the US, and you'll get a squeeze in one direction or the other. But you know, they're always moving it. There's plenty of movement on it. So I don't really mind being in either direction on this one at the moment. I think it's probably more bearish than bullish moving forward. So might not be the best trade in the world, but if they do the V-shaped recovery, it's fine. If they don't do the V-shaped recovery, I've got two supports coming within ADR, and hopefully we'll just get a false breakout and stay in a range for a bit until next week. But long at the moment on that one on the RSI extension. Go, sir. Thank you very much for the $10. Very much appreciated. Number one fan. Hey, you've done an animated thing. That's cool. I know how to do that. Thank you very much. Very much appreciated. Franco, oil. XO update news morning. Oil. Yeah, oil collapsed obviously on the bullish US move. Don't trade oil. No idea. It hasn't got any idea either, is it, at the moment? I don't trade oil at the moment because all I want to do is buy it, because I think there's going to be something kicking off militarily somewhere which will increase the demand for oil. However, my other side of my head is saying, don't be stupid, everybody's buying electric cars. We don't need it anymore. They come out and say oil demand is rising and they are expecting it to increase. Everybody's buying electric cars and not buying petrol. I don't get it. So I just fundamentally do not get oil. So I'm not trading it. From a technical perspective, yeah, it's a short. Breakout, retest, short it, back down into here somewhere. However, this could be a higher low going in at 71.9 retracement. You want to be buying it. One of those two is true. I don't know which, though. As always, if I knew that, I'd be a millionaire. Not to be noisy, has the year so far been good? My best year so far? I think you mean nosy. My year so far, no, not good. I'm not having the best year ever at all. But it's only halfway through the year, so we'll see. Morning, Mark. What do you think of gold for the next few days? Don't know. Don't trade it. Don't have it. Your name is Gold Wealth Life. I assume you know more about trading gold than I do. Otherwise, your name wouldn't be Gold Wealth Life. And why are you asking me for analysis? Surely your signal service you run, with a name like that, I'm assuming that's what you do, should be just telling other people what to do with gold. I don't know. What I do know is that it came down on Friday. I haven't got a chart, but I can tell you it came down on Friday. So do you think that US dollar will drop and it will go back up again? Or do you think the US dollar will continue to run and it will go down? Because it does the opposite to the US dollar, doesn't it? So I don't know. What's your signal service say? The inverse of the US dollar, whatever that is. I might have that completely wrong, but when someone comes into the channel with a name like Gold Wealth Life asking me for advice on gold, kind of have to assume you're just trying to make money out of people wanting signals. I don't know. Might be wrong. But anyway, I still don't know. I haven't got a chart. I'm not going to show you. I don't trade it. Pound US dollar long at the moment, off the back of this channel that's keep going up. So RSI extension to the downside, getting in long, H1M5 mean reversion, usual stuff. I'm not targeting much on it. I'm just going for the accumulation before news, assuming that they're just going to undo the news move. Overall, though, want to be longing it, shorting it rather, really, because the pound is likely to drop off the back of the interest rates. You never know. There is a possibility that Bailey will come out and the statement next week will say, no, we're not actually doing much with interest rates because we're not quite there yet with inflation. In the UK, we are a lot more staid in the fact that we want definitely things to happen before we do something. So we're not there yet. The downside, or rather the upside risk for the pound next week is that CPI year on year bounces and then the PMI numbers bounce. That would mean maybe not dropping the rate in July. But for me at the moment, I think July is probably when we're going to drop the rates. So the market will start to factor that in over the next 4 weeks, 6 weeks. So we should see it gradually starting to weaken. But because it's the pound US, the US will drive it more. So if as long as US goes up and down, which it will do because there's no bullish or bearish bias, doesn't really matter, I don't think, which way you trade the pound US at the moment. Just take extensions. Gold Wealth Life. I must do if you don't trade it, but I don't run any signals. Okay. We have big news on Wednesday. Yeah. So yeah, gold, you do the opposite to the US dollar. Yeah. US dollar goes up, gold goes down. US dollar goes down, gold goes up. Why? Gold is priced in US dollars. Very, very simple. There is also only 50% of the gold on the planet available because Russia has an import-export ban on gold. They hold roughly 45% or something, I think the last figure was, of gold reserves. So if Russia's got half of it and it can't go in and out, there is more demand for gold. Price goes up. But it goes up and down. Ask John Wick, he knows. This is what happens to gold. Supply and demand. Used in electronic components. 90% of manufacturing on this planet is electronics. So we need gold, lots of it. Franco, I trade gold. I'll tell you, it goes up, it goes down. In between, there are rivers of tears. Yes, that's why I don't trade gold. It's a really good thing to trade gold if you have a very, very, very strict risk reward based strategy, but psychologically you can handle taking losses all the time. Because whatever technical analysis you use on gold, it will just go, hey, everybody, I know I've done this 90% of the time, but today I'm going to do that. And you'll be like, oh, my strategy doesn't work. No, there's nothing wrong with your strategy. Your strategy doesn't work because strategies don't work in general. But gold is just going to kick you in the backside over and over and over again. It's just volatile as you like. So, I don't know. That's why I don't trade it. New Zealand dollar CAD got out of the remaining shorts on Friday from the squeeze, which was beginning of May. As you can see, loads of drawdown control. So got out of that on Friday, finally, and kicking along at the moment, looking for recovery on that move. So again, I'm not going mental on these targets at the moment. 150 ADR to the upside, so it's not going to do that. Well, it could do that today. At the moment, the market seems to be able to do big ADR days, but that's only because ADRs are so contracted. But yeah, so just looking for a push back up and then potentially a drop. I don't normally use break-even stops, but if we're sitting sort of up around here, I'm going to protect these because I don't know whether or not this move on the US that caused all this movement is actually going to be continued. I think it's probably just normal knee-jerk reaction, non-farm payroll crap. Yeah, if you look at the actual news that we got last week and the fundamentals basically behind the news, the unemployment rate went up in the US. So that is bearish US dollar. The employment change went up, and this is what the market uses to do the reaction, but that is not what drives the direction of a currency. The unemployment rate is what drives it, and that was a negative. So we had a big bullish move off the back of the green number. Everyone went, hey, everybody, buy the US dollar, and now they're going to do that. That's what I think is going to happen. But so I don't mind which way it trades. It's the US. It will move up and down a lot. So New Zealand dollar CAD, obviously the Canadian dollar now is weak. Fundamentally should be weak. The New Zealand dollar, if they were to put that interest rate up, is going to fly like crazy. So bias on this really is bullish. And as you can see, that's what the market's been doing because I got into a short and I got squeezed on it. But I got into a short off the back of a fundamental, which just did not manage to get undone. So again, this was the New Zealand dollar not changing their interest rates. And that is the reaction to no news. Just loony. It's either nothing or all at the moment. It's horrible, horrible, horrible market. Horrible. But fingers crossed it will start to change now. Interest rates are on the move. New Zealand dollar Swiss, again, bullish bias overall on this. New Zealand dollar not changing interest rates, Swiss doing so. We still need to wait and see what happens next week. Don't forget, this is the Swiss franc. Next week, when the interest rate change happens on the Swissy, they could put it up again. You've absolutely no way of telling what the Swiss are going to do. So them, you know, they're notorious for this. You know, they did the Swiss franc peg removal, which made all the brokers go bankrupt. They are notorious for not telling you anything and doing stuff just like that because they fancy it. So just got to be careful. I want to see another interest rate announcement from the Swiss. If it comes out as no change, that kind of tells me that what they are going to do is hold interest rates at 1.5. Yeah. And wait for everybody to catch up. And when everybody's caught up, they will then start to drop. So I think what's likely to happen is they've gone first, get ahead of the curve. They don't need to do anything with interest rates because their inflation's where it is. When everybody starts to drop a couple of times, they will then gradually start to drop and stay ahead. But I want to see what they're doing. I want to see next week. Yes, that's what we're up to. But Swiss. So technically, it's along at the moment. Banks have pushed So we should see some profit take on that leg, which is what we're seeing at the moment off of that leg. How long the leg is going to last, we'll have to wait and see. You've got a nice monthly triple bottom, quadruple bottom type move there, which is a previous breakout. So we had this range, which we couldn't get through. Propulsion gap, that was the big order that broke the range. They came back, they tested it, they added. You've got support coming up at that monthly low at 200 ADR. So right now it's a long from Friday. So if you have taken that one, be looking to get up probably into that propulsion gap or pick a range high, depending where your target is. If it doesn't work out, you'll be scaling in down to there, and then you get a bounce off of that leg there. New Zealand, US, out of that one on Friday. Again, targeting an A-shaped recovery, sorry, a V-shaped recovery on this. It's just a massive overreaction to a green number. So, yeah, don't have a problem being long. If it doesn't work out and they do want to drive some continuation in the US, that accumulation is probably where we're going to find some support, which is 225 ADR. So there'll be like 2, maybe 3 positions in it. And obviously then we'll look for them to undo half of that bull move there if they can't get back up into here. Danger is obviously this double top. Yeah, so the market sold that double top. And then we had a news event which hammered it home. So we could easily form a range up here and just sit around for a bit. Ferdos, are you joking? No, I'm not biting, not playing. I'm not trading gold. Shorts on US dollar CAD at the moment. Second entry taken today. So second entry just gone in on that one. And looking for a push down now into that propulsion gap there. So this one, obviously, US dollar CAD, as you can see on the chart, is an absolute dream at the moment for RSI. It is just the most beautiful, easy thing in the universe. Yeah, so shorted it there, longed it, shorted it, longed it, longed it, shorted it, longed it, shorted it, longed it. I'm short. Just going up and down. Yeah. Trade partners, low ADR. No reason either of these should go anywhere unless FOMC upsets the apple cart on Wednesday. Sorry. So that is your potential fly in the ointment this week on Wednesday, FOMC. So that CPI number coming out is going to move it. Ideally, we'll have the non-farm payroll undone and an A-shaped recovery on that by Wednesday. So I'd like to be out, ideally, just in case. But short on that one at the moment. US dollar Swiss. Again, bit of a tricky one, US dollar Swiss at the minute. We're in this propulsion move that broke that range. It looks to me like they added here, but obviously it's skewed by the move that we had on Friday. So this area here is potentially where they're going to add more shorts, which will give you that A-shaped recovery on the US dollar Swiss. But as you can see, this is the Swiss franc just is a loony. Crazy movement on it when it wants to, which can get you caught offside. The danger is with the Swiss, and this is why it is more dangerous to trade than others. If you get a big, strong move in the Swiss franc just because they're piling into the Swiss or there's a safe haven run or something like that, and then you get a news event on the other currency, the cross, which goes the same way as that Swiss franc move just went, that's where you get these parabolic moves, which they will always profit take on because they find themselves in much more than they were expecting to be in, so they'll take the profit. But because they're so far ahead, you quite often find it much more difficult to get out of them. So at the moment, looks great for shorts from where we are up here. However, we know that they are buying this area up at the moment too. So that is your propulsion long, short. That is your propulsion long. So those are your battle lines at the moment. Wednesday, we will break out of one of those, I suspect. So short right now, though. You're just about to get a reverse alert on the hourly. You've had a 15-minute reversal this morning, just gone in. 5-minute was earlier on. Actually, no, it wasn't, because they invalidated it. So you did have a reversal alert on this there. Then they put that new high in. So you've just had another alert at exactly the same spot, basically, because obviously it's just done that today. So short and US dollar yen we've covered. Load of rubbish. Absolutely no clue. I'm really interested to see what happens on Friday with the yen rates. I really do not know what they're going to do. But I think there's a good probability that they will put interest rates up. But I don't think the market is going to necessarily react to it. So we'll see what happens. But yeah, tricky. Very tricky this week with these interest rates. So CPI is the big one this week, Wednesday. That's where we're going to find out what is going on. Right, that's all I've got for you this morning. So it's basically back to the normal schedule, morning, afternoon for the rest of this week. And I'm probably just going to stick to this schedule now. So I'm not going to change my streams for news anymore. It was good, but it's the feedback I've got basically is it's tricky to follow because obviously you never know when I'm coming on. So this, I think, is probably a nice, easy, mixed schedule for everybody. So we will do that. Business in Japan are hurting. Yeah. Saw an interview with larger diaper maker wants a lower yen. Yeah. They're struggling. They are going to struggle, businesses, because it's, as I say, everybody's exporting from Japan. And this down here is how you make money. This up there, you can't trade. You know, they're stuck. They're really stuck, Japan. It's a horrible situation to be in when you have always had this sort of control mechanism to control your destiny financially. And all of a sudden that control mechanism isn't working anymore. You haven't got a backup. They haven't got a backup plan. So I don't know. If can you imagine what's going to happen if that CPI number pumps on Wednesday for the Fed? If that CPI number pushes and that interest rate drop gets pushed back to next year, there's nowhere for this to go but there. Yeah. It's going to get really interesting when we get back to that 160. I think it'll get interesting if we get back to there. That's 125 ADR, last month's high, because they haven't managed to break out of that last month's high. There's going to be limit orders at last month's high ready to go. If it breaks through those limits and they flip long, it's just going to pump it. So, I don't know. It's a worrying situation for the Japanese at the moment. But we will see. We will see what we see. I know it's exotic, Singapore. I haven't got it. Don't have any exotics. So I've covered everything I want to cover today. There's no more ADRs at the moment. Euro US dollar is your best long intraday at the moment. Yeah, we'll see what happens the rest of the week. So tomorrow I will be back at 2:15. I'm going to trade the New York Open and just have a look at what's going on. News-wise, obviously, you need to be aware of nothing today and pretty much nothing tomorrow, to be honest. So we'll have a look at what's happened with the pound claimant count tomorrow morning tomorrow afternoon when I come on, but not a lot really. So that's what we're waiting for this week. That's the key this week. Up or down. All right. So anything you need, I'll be in the Telegram group or Discord, and I'll be around in there. I'll keep you updated on the FTMO account as well. See how I get on with this. At the moment, I'm just going 2 contracts or 2 lots on everything, basically, because it's fun. But I've got a 14 grand target to hit. So I did $1,000 on Friday. I'm just sticking literally on H4 RSIs, hourly 90/10s and daily 90/10s, so 80/20s on the 4 hour. So I'm not overexposing myself. I'm just sticking single currency really. Although I say that I have gone too short on the pound, but yeah. So I'll keep you updated on this. It is a bit of a fun at the moment, but if I get funded, fantastic. What can you do with another 200 grand, eh? Blow it. That's usually what happens. Right. Have a good rest of your day. Anything you need, Telegram or Discord. Other than that, I will see you guys next stream. Have a good day.